Thank you very much. So about 18 months ago, I met the chair of Good Energy, and they were looking for somebody with a digital background to take over what had been one of the pioneering renewable energy specialists in the country. And the pitch was very much like, don't worry about the energy market, Nigel, it's pretty stable. We've got plenty of people who really understand energy within the business. We need somebody who comes from the world of digital platforms because that's where we are focusing more and investing more. And actually that's where our overall aim of trying to help the country's energy transition will be more important. So I've learned a lesson never to trust a chairman in recruitment mode, but nonetheless, we are still very much here and thriving despite everything in the energy market. And I'm going to take, I hope, 20 minutes and no less just to talk through what we do and why we are excited by our future. So let's start with what Good Energy actually does, and it's very simply three things. We are an energy supplier. We are by no means the country's biggest energy supplier, in fact, quite the reverse. We supply about 100,000 domestic and business customers, 90,000 domestic, 10,000 bigger businesses. But what we supply them with is a more unique product because unlike many tariffs that are branded green, ours is genuinely sourced from 100% renewable electricity. The way we do that is that we are the people who help take electricity from smaller producers, farms with a couple of wind turbines, solar panels in a field, an anaerobic digestion unit, which is really making electricity from a large compost heap, frankly. And we will kind of manage their offtake onto the grid. Collectively, we source enough power from these people to power Manchester for a year. So we have plenty of power coming in. It also means that we are not subject, in those terms, to the vagaries of the wholesale energy market and the credit requirements of the wholesale energy market because we're dealing with different people. And it's a differentiated product. It particularly appeals to green households, and there are about 4 million homes in the UK who would regard themselves as having a green objective as key to their consumption. And it particularly appeals to businesses who need to demonstrate clearly and document their environmental footprint. So the sort of customers we have are things like big city law firms and the Crown Estates. For a small supplier, we're very big in the world of generating your own. So we're the country's second biggest administrator of what's called the feed-in tariff. And that was the original scheme for people who had solar panels on their rooftops. That's a very different type of business. It is one where we're being paid an administration fee through Ofgem for meter readings, verifications, managing, again, the whole flow of energy onto the grid. And it has much more of the characteristics of an annuity for us. And then lastly, we are very interested in the greening, not just of energy consumption, but of transportation. And through Zapmap, which is a business in which we're the largest investor, we own and are helping to grow the UK's leading app for electric vehicle drivers. So that's who we are, and we have a very clear mission in life, which is that we want to help 1 million homes and businesses cut carbon and increasingly also cut cost from their energy and transport use by 2025. And at the moment, we're touching about 700,000 homes and businesses through those operations I talked about. So we're on our way, and we think we can comfortably meet that goal. And if that's our vision, the overall mission of the company, which has been around 20 years, so it was founded as one of the earlier sort of challenger brands in the energy market, just as deregulation came to the UK. It's been listed for about 12 years. That hasn't changed. We are here, we think, to provide a cleaner and greener world, and we're quite an ethically driven organisation. And this is where we're trying to get to. So yes, being a supplier of this differentiated product, there will be less and less demand for that over time. In sort of 10 years' time, potentially the UK's grid will be very renewable. For now, there is the sort of segments of the market who want it, but we see particular growth and interest in helping you not just generate, but store, use and share your own power. A lot of technology emerging in that area, and make it easier to own and drive power and pay for an electric vehicle. Now, these sort of presentations maybe don't often start with the board of directors, but given what's happened in the energy market, this seemed relevant. So you will have, I'm sure, since you're all investors, be aware that 60% of energy suppliers failed, mostly in Q4 last year. Now, some of them for unfortunate reasons, some for less good reasons, frankly, and it's been the subject of parliamentary inquiries and various things. We like being a public company because it gives us very high levels of transparency and governance. And I think we have a strong board for an AIM-listed business. I have a long track record in digital businesses. I worked for a number of years at Money Supermarket, Money Saving Expert, and with Expedia Inc., where I was part of the team that ran Hotels.com globally. My CFO, Rupert, brings in energy market experience. He spent a lot of his career at Centrica. And Will Whitehorn, our chair, has a number of experiences of kind of platform-type businesses and taking them right through to public markets. He was involved in Trainline in its early days. He was on the board of Stagecoach, and he built his career working with Richard Branson at Virgin Group, culminating in being the CEO of Virgin Galactic. But equally importantly, we run to very high standards of transparency and governance. That's exactly what Ofgem require of us. A lot of energy companies are having to sort of superimpose this on what they do. As a public company, we've always had this. So a couple of points on each of those areas of the business. So let's talk about supply to start with. And you can't talk about supply without talking about the energy market. So you'll be pretty familiar with this. This is actually the price of, in the amber, it is electricity, and the black, gas for this winter over the course of the last 18 months. And so as you can see, something that was normally pretty moribund, and that, if we'd got this graph coming back this way, it would be flat as well, has seen these extraordinary spikes in cost, culminating really through the summer when there was particular anxiety that, in fact, that's now what happened, Russia would completely cut off gas supplies to Europe. Nobody quite had the fact that they would also then blow up the undersea pipelines on their bingo card. But that last spike really caused by market anxiety around this. Just a question there.
Can I ask, who do you think blew up the pipeline?
You can, and that may be beyond my pay grade, but it wasn't me. We might be committed to a zero carbon future, but one has to be realistic about these things. I think I have a fairly clear inkling. Why share this? Well, navigating your way through this has not been easy, and it relies on a very clear, robust approach to risk management and forward hedging, which we have been able to do. So we are very pleased to be one of the survivors of this marketplace. And again, our focus on buying electricity from smaller providers means that we are not subject to what is quite a locked wholesale market at this point. Even some of the big players are struggling to trade in the wholesale markets, but we've been able to trade our way through it and respond flexibly. We're also derogated from the price cap regime. So for another time, I can give you my views on the price cap and its role in the debacle we've seen in the UK energy market. As a 100% renewable supplier, we're not subject to the price cap regime, and that is because our sourcing method implies additional risk in the price, which Ofgem acknowledged, and therefore gives us more flexibility. So we will tend to move price both up and down more frequently than the cap allows. It is undoubtedly a premium product, so it sits at about a 10% premium to the cap level overall, but it again gives us another piece of flexibility to survive in this market. What is very clear are our green credentials. So we are repeatedly acknowledged by some fairly trustworthy sources as being the UK's greenest energy supplier. So for organisations and individuals for whom this is a motivating factor, we have a lot of evidence that our approach allows you to point out that you are carbon-free in your energy consumption. We're also, very proud to say, quite a high service operation. People are paying a premium for their energy. They expect you to be able to answer the phone and deal with their issues promptly. We have a 4.6 rating on Trustpilot, which is basically us and Octopus, who are sitting at that high level of service. And that is no accident. So, whilst it's not the biggest supply business, it is a well-managed supply business that can then help us launch off into these new services. So the thing that I would leave you with that is not only does it have a strong green proposition, it is sitting on strong technology. So we were the first licensee of Octopus Energy's software platform. So Octopus, rather like Ocado, see themselves effectively as a technology company who happens to sell energy. Kraken is a platform that allows you to operate much more nimbly. The days of having people in one team doing collections and one team doing billing and one team doing research, that's gone. You can enable smaller groups of people to deal with the customer's problems end to end, and that enables us to get more efficient in our operation and also offer a higher level of service. We should expect about 50% of that estate to be on SMETS 2, so the more updated smart meters by the end of the year. And that's important quite apart from the fact that smart meters have suddenly become a highly sought after device for people after years of people grumbling about it. They do now want to visualize how their energy is being used. It's important because it enables future products and services as well. And the last thing is, unlike some of the smaller companies, we do have an in-house, we call it an energy trading function. It's really an energy optimization team. So we have a dedicated team who are using everything from long-range weather forecasts to forecasts from our own suppliers to basically ensure that we have the right amount of power and gas brought in and to manage volatility in the very short term, which you'd expect an energy company to be able to do. So, for example, today is a pretty windy day. We'll have probably had slightly too much electricity in, and therefore we'll have been selling back into the grid. If we know the day is going to be particularly still, we will buy additional power in advance to cover that period. We see the supply business, I think, as something that is capable of some growth and throwing off some cash over the long term. It is undoubtedly at the moment more a case of good risk management, investing in working capital to buffer out, to sort of deal with those shocks in the marketplace. So our other two businesses are where I expect the company to grow. So this is one of them, which is the business of providing services to people who want to generate and increasingly store their own power. So how do we do that? Well, we are one of the leading administrators of the feed-in tariff and its successor products. We think we have about 20% of the market here. It is a very different type of business to energy supply. So here we're being paid by the regulator, Ofgem, being paid about £25 a metre point. And what we're doing is providing administrative and customer service for people who are getting paid back for their panels. And that means it's a very different type of business. It doesn't require anywhere near the level of working capital and cash investment for us. It's a very sticky type of business. So we see a churn rate of low single digits amongst our feed-in tariff customers. And that's partly because, unlike some of the major suppliers, this is a serious part of what we do, and therefore we have the right level of investment in our customer service team to help people out in this area. And this is going to be an area of innovation for us. So we are about to launch a new product. So if you have solar panels, you'll be aware of this, but most solar panel owners in the UK are paid what is called a deemed amount. It's basically, there's an estimate of what they're generating, and they get given that. And it's actually irrelevant what they actually generated or what their net use was. So we are innovating in this market to actually bring about payments for what you generate. So I would like to take market share in this market. And it is a good market to be offering more services in because, as you might imagine, one of the impacts of the energy crisis is a resurgent market for solar panels in the UK. Google reporting a threefold increase in searches for solar over the course of the summer. The payback period on solar at these energy price levels is roughly about 5 years, whereas people used to say 10. So both the cost of solar panels has come down and obviously the cost of energy has gone up. At the moment, there is a bit of a supply chain crunch, actually, so you can't quite sort of leave now and think your energy problems will be solved by installing solar. But nonetheless, this is clearly a growing market, and aligned with battery storage can go quite a long way to making a household energy sort of independent in many ways. In fact, we think that people who are not heavy electricity users may well become net exporters if they have sufficient solar and storage on the roof. And we intend to offer innovative services to this market, and we have a very clear background in it. And the fastest growing market we are exposed to, I think, is electric mobility. So again, you will be familiar with some of these points, but the UK has resolved to ban the sale of new internal combustion engine cars by 2030. And people are reacting to that already, and also reacting to the fact that electric vehicles are quite fun to drive. So electric vehicles are the fastest growing category of new car ownership in the UK. They have been for about 18 months now. We expect compound annual growth rates above 40% in terms of electric vehicle sales over the course of the next few years. And we play in this market through a business called Zapmap, which, if you have an EV, the chances are you'll be familiar with because it reaches about 75% of the owners of battery electric vehicles in the UK. And what Zapmap does, well, in sort of marketing terms, I suppose, is to try and cure your range anxiety. And if that's a bit too marketing-y for you, what it really is a very intelligent set of maps which have live data as to the availability of charge points across what are over 40 charge point networks around the UK. So you can set off with Zapmap and know where you will be able to charge. 75% of those charge points, the data is live, so it will tell you whether it's working or not, whether it's free or not. It's bolstered by community data, so you'll be able to find out if it's under lock and key for overnight hours, that kind of thing. So there is a mapping product. There is a payment product. So 40 different charge point operators means up to 40 different ways of paying for charges, cards, keys, memberships. You will often see EV drivers clustered around charge points, stabbing at their phones, trying to figure out which of the solutions they need. Zap Pay enables you to pay on your phone, and then we take a small cut of the charge cost there. Its principal revenue stream is actually subscription. So whilst the map is free to use, if you want to use it in your car dashboard, then you have to pay a subscription, which at the basic level is about £3.99 a month, moving up to about £13 a month. So in Zapmap, we are trying to build a strong business with recurring revenues, which really enables electric vehicle drivers to plan their journeys. And the latest news here is, I think, very encouraging for us. And actually, let's start with a name down the bottom. So FleetCor may or may not be familiar. So FleetCor are a fuel payments business based in the US. They're a multi-billion market cap business, and they run something called the All-Star card, which if you drive a petrol or diesel car as part of a company's fleet, enables you to pay for that petrol and then charge it back to the company. So they're in the business of administration. Obviously, they have a very big interest in the transition of that business away from petrol and diesel and into electric vehicles. And in the summer, we announced that FleetCor, along with Good Energy, were backing Zapmap's Series A fundraise. So between us, we've put £9 million into Zapmap. It means that the app is now valued at just over £26 million. And we've done that to really fuel its further growth. And its latest figures, which we released last month, are pretty impressive. So of the 473,000 electric vehicles on the road in the UK, we have 470,000 of them as registered users. Many of them are using the services on a monthly basis. We have approaching about 10,000 paying subscribers for that, and we're just beginning to build that up. So Zapmap, I think, is a very encouraging business for us that can both really sort of fuel the adoption of electric vehicles, no pun intended, but also exposes us to a very fast-growing market. And with FleetCor, we have a partner with an interest in the fleet market, and everything I've just been talking about is equally applicable to a company running a fleet of electric vans or cars, again, centralising payments back to them. And so there are specialist products for fleets as well planned there. And bringing us in on time, we should just touch on the numbers. The financial reporting of any energy company is going to be quite extraordinary at the moment, and we put out our interim numbers last month, and I won't bore you with the entire P&L, but you can see the extraordinary nature of it there. So energy utilities are not supposed to post 50% revenue growth, but that is, of course, the function of the energy market. In the interest of balance, I've also put the track of our gross profit in the half years there, and there you can see, the COVID and the unwind from COVID. So we had a very high gross profit in the first half of 2021. That was a particular sweet spot for energy companies because energy wholesale prices were very low, yet usage was recovering. Obviously, seen the inverse now through the years. Overall, what we are looking at is a business that had a very profitable first half last year. We then had a significant hit in the second half as the energy crisis bit. So we made 5 million in the first half, but lost 8 million in the second half. We've now brought that back to pretty much break even, and we have told the market that we expect the business to return to profitability this year. So we are expecting it to be a profitable business. Perhaps more importantly, given I've just told you both that we are operating and navigating a very extreme conditions in the energy market, but also that we are investing for growth, we have a considerable amount of cash on the balance sheet. We have about 22 million in cash on the balance sheet. That's partly because we sold our generating assets to release that cash at the start of this year and make sure the company was entirely debt-free, which on a net basis it is. And that capital can be used both to make sure that we remain safe in the choppy waters of the energy market, but also to invest behind further growth in people generating their own power and in electric vehicle use. And that is where Good Energy, I should say, is heading. And that's 20 minutes.
Okay, brilliant. Thank you very much, Nigel. Excellent. So I'd like to take some questions to the floor. Peter, got a microphone, please.
Thank you. It's very interesting presentation with a lot of detail. But, you know, given the background of the turmoil in the energy market and the political and economic backdrop, I mean, what is the investment case in this? The investment case here, and if you can just mention how you're doing against your competitors.
Yeah, sure. So in terms of competitive performance, we've just put a lot of numbers out last month, and we have slightly increased our overall number of customers year on year, so from 275 to 277,000. So the energy market itself is relatively stable in terms of customers in businesses. We have, stayed alive, I suppose, in the supply market where 60% of our competitors have failed. The investment case, however, is a growth case. So we're not particularly expecting to grow our supply business that much. We're saying, look, the country is on a certain is moving in a direction around a transition to zero carbon energy. And between our investments behind people generating their own power and people driving electric vehicles, we are exposed to two very fast-growing parts of that market, and we expect to invest to see further revenue and profit growth from that. So I suppose we've gone from saying we're a utility, we're going to be nice and stable, and we'll have a rising stream of dividends, to saying we are very much a growth play. We are investing for that growth in new markets, and we think the value of the business will grow over time. But we're certainly more now a sort of growth kind of idea story than a utility story, I suppose.
And the competitors?
So in terms of our specific area of the market, there are only two other deep green suppliers. So there are only two other players with the derogation from Ofgem. That's Ecotricity and Green Energy, and Green Energy are very small. I see our main competitors, frankly, as being the other players in terms of sort of feed-in tariff and other generation services, and in terms of electric vehicle services. And in EV, we have 75% of the market. Electric vehicles, sorry, we have 75% of the market. There are one or two other services around what I've been talking about. There's one called Bonnet, which is second starting. But the thing about Zapmap in particular is that it's a sort of 10-year labour of love by the original founders to build up all of this mapping and data. It's actually quite hard to find. So that, in many ways, has quite a significant competitive moat compared with the other players. In the energy services business, I think the most formidable competitor we've got in some ways is Octopus Energy, but they are doing an awful lot of things. They're doing heat pumps, they're doing time of use tariffs, you name it. We're going to stay very focused on services for people who are generating, and then actually with a number two to E.ON, we've taken some share in the last year, and I would hope to be able to take some more.
Okay, thank you. Anybody else? Peter? That gentleman down there, thank you. Can you keep fit tonight, Pete, aren't you?
Thank you very much. Just a quick question. The Zapmap sounds like a little jewel in your company. Are you able to say anything about the revenue for it at all?
Sure. So we disclosed quite a lot during the fundraising round we've done, although that was obviously to investors. We expect it to do about £1 million in revenue this year, and to try and double that next year, and it had revenues way below £1 million last year. So it's, I suppose the best answer, or the simplest answer, is on track to hit the business plan that it raised the money with.
Any other questions at the moment? Gentleman over there, Peter. Thank you.
I just wanted to ask, you can imagine there's a lot of roofs in this country. Can you imagine, or how long would it take before everybody's got a solar panel on their roof? Because, I mean, that's the obvious solution, isn't it?
Yeah, so we did a report with a fairly serious consultancy called Energy Systems Catapult about how the UK's grid could get to zero carbon by 2030. And the answer, frankly, is put solar on every rooftop in the UK. The number of domestic settings with solar at the moment is roughly about 1 million, I think. So it's sizable, but there's another 19 odd to go. So, if the UK wants to hit its climate goals, then a significant expansion in rooftop solar is the way to do it for both homes and increasingly businesses. And the constraint at the moment, frankly, is a sort of materials and supply chain constraint. Quite a lot of the parts that are made in China. So it's stuck with the usual supply chain problems we've seen over the last year or so.
Would it not destroy some of the big electricity supplies?
It would. I don't know it would destroy them because the age-old issue around renewables is that the supply is not always there. So you're going to need your grid link to sort of power you when the sun's not shining and the wind's not blowing, unless you've obviously got. But if you get to a place where you've got battery storage plus solar or wind, you should be able to take yourself pretty much off the grid all the time, which then means, yes, those big incumbents are under threat unless they can adopt to where people think eventually the energy grid is going to, which is a much more sort of responsive environment where people are generating their own power some of the time, but then they need power from the grid other times, that everyone has a smart meter, and there's much more differentiation in terms of charges for different times of the day. And so, we are investing behind a view that says in 10 years' time, the whole nature of electricity supply in this country should be very different.
Thank you. Peter, the lady here. Thank you.
Down that way. Okay. You talk about, under your Generate business, helping people share. And at the moment, basically, the regulatory framework gets in the way of someone with a south-facing roof selling their energy to their neighbour with a north-facing roof. How do you see yourself playing in that market?
Yes,
and to what degree are you dependent on regulatory change?
You are
and shall I ask you my second question,
yes,
in case I don't get one, which is, are you playing in the flexibility market?
So we're not particularly playing in the flexibility market at the moment. In terms of sort of how can we get on with sharing, so we're doing it in the B2B space at the moment. So when we take on a new business customer, often it's a question of matching them with what's called a PPA, a power purchasing agreement. So we can say to an office building in London that their power is effectively being supplied by the rooftop of a leisure centre in Scotland, for once. So matching at scale is easier to do because you know how many sort of gigawatts so in the commercial market it's easier. In the domestic market it does, as you say, require a regulatory change, which we are lobbying for, but it will probably come after storage and other sides of that.
Gentleman over there.
This might have been touched on in the previous question, but do you have any plans to get involved in the storage part of the market?
Yes, we've just begun this year a relationship with a business called Caplaw Energy, who are reasonably, I think, well-regarded installation business. And so we're sending them customers and being paid a referral fee. And obviously then also the people who take on their services are then using us for administration. And Caplaw are actually seeing a huge increase in demand from us for the combination of home battery and solar. And that at the moment, is sort of 90-odd% of the orders we've sent them is that combination, and heat pumps, which potentially are a fast-growing business of the future, is only about 10% of it at the moment. So almost the thing that's changed, I think, even in the time I've been doing this job, is that the motivation to bring in sort of energy technology into your home has gone from being a purely environmental one, which is very important for a lot of consumers, to being, yes, a green objective, but frankly also a cost objective, and then it's the solar and battery combination that will kind of fix that for you.
Thank you.
Okay, thank you. I've got a couple of questions for you. Regarding the Zapmap.
Zapmap, yeah.
Zapmap. Obviously a really good product. Is it in danger of someone like Google, or is it IP protected, and could someone undercut you by launching something similar? Yeah,
so that's back. So I often get asked this question, which is, and you need to think about the way Google eventually had to buy Waze, if you're familiar with that, the sort of the traffic app. And that's really because the data behind Zapmap is very unique. And it took the two founders 6 or 7 years to contact every single charge point operator, get very different data in, and build up a service. Can I
want some
grab a glass
water?
of water here?
Yeah, of course.
And so...
Thanks, Mark.
Thank you very much. And so what they've got is quite unique and hard to replicate data, which means that somebody like Google, who wants to be around sort of automation and scraping public sources, can't get. So that's Zapmap's defensive. I mean, we're investing to hopefully make the Zapmap app a lot easier to use. Its real value, though, is in the underlying data it's got.
Yeah. Okay. Just touch upon, you mentioned there's a lot of cash, debt-free. Is there a dividend?
There has been a dividend. So we've moved dividend policy from the era when we were predominantly a supply company who owned generating assets. Then we had a sort of progressive dividend policy. We announced, as we'd sold the assets, that progressive policy was coming off. And so we do pay a dividend. We paid an interim, and we will, therefore, you can imply that we'll pay a final as well from that. But we pay a dividend as a recognition that some of our particularly customer shareholders would like to see some element of dividend, and some fund investors need to see some sort of dividend part of it, but it's not the main objective of our capital allocation policy at all. No, we're very much investing for growth rather than anything else.
Yeah, okay. Market cap's relatively low, as was the share price today. Due to companies going out of business, due to the economic pressures of what's been happening in the, obviously the energy markets, does that make opportunities for acquisition?
I mean, of us, or
no, you?
Yeah. So I mean, we're an AIM-listed company, and the reason to be on that market is to have access to shares and capital. So there is potentially there are a lot of emergent technologies in the energy market, covering quite a lot of the things I've been talking about. And it's a very interesting inflection point for lots of them. So yes, potentially we would look at acquisitions. Zapmap has been an external acquisition. They were very sort of green motivated founders who the company met and then invested in. And we are, frankly, and we've said to investors that we are scouring the market and scanning the market for similar types of opportunities as they come along.
Okay. Well, I think that's it. We're over time there.
Right.
Nigel, great. Thanks for the presentation.
Thank you.